Hey there, my name's Kiri and I'm a flower farmer here in Western Washington in Zone 8A. And I have been following some comments and some feedback from subscribers. There seems to be a lot of interest in gathering more information about how to run a flower farm business, not necessarily just information about like planting and floral design. So I wanted to share a little bit of that with you guys. And this serves two purposes. So first, I want to share some insight that I have because I do have an accounting and tax administration background. So I want to share information that I know to be true about running a business. And I also want to share this because I am getting ready to share how much money I made my first year of flower farming. And I feel like having some of this foundational accounting knowledge, if you don't already have it, can be really helpful when we get to that point of discussing how much I made and whether things were profitable or not. So this will work out to be a 5-part series. We'll talk about the different types of accounting, and I'll share some information with you that can be helpful to analyze your records and to maintain your accounting records. We'll also talk a little bit about taxes, and then at the end I'll share how much money I made, and we'll walk through some accounting analyses based on the information in the previous videos. So I hope that you stick around through this whole series, and I hope that you find the information helpful. I will caution you that this is not accounting advice, this is not legal advice. I am not a licensed CPA or lawyer, and I'm not your CPA or lawyer, so I don't know your specific situation. And there's so many different aspects that can change your tax liability, how you need to organize your business, all these types of things. So if you do have specific questions, please reach out to your hired professional help. This is just general information, not tax or legal advice. So with all of that out of the way, let's start with part 1, which is bookkeeping. So bookkeeping is a type of accounting, and it's essentially the process of recording and tracking your business's financial transactions. And it's a little bit mundane and it's kind of boring sometimes, but it's super, super important. It's important because, I don't know if you've heard the saying, crap in, crap out. If you don't do a good job of maintaining your books and entering your information correctly, then when you try to run reports or analyze your data, you're not going to be able to draw very good conclusions because the data you put in wasn't good to start with. So having good information makes it easier to budget. It also gives you the data and information that you need to make informed decisions about your business and where to allocate resources so that you can be successful now and in the future. And it gives you a reliable measure of your business's performance and profitability. It can impact your taxes, and it can also make it easier on you if you are ever audited by a taxing authority. It's very easy to pull up your books and be like, here you go. And they're like, cool, sweet. So just a couple tips on how to do bookkeeping efficiently, which if you're at the beginning stages of running a business, you're probably going to be doing this yourself. Try to do it consistently. Try to set aside some time every week or more or less frequently, whatever works for you, but try to be consistent and just do little bits at a time. If you can build systems to help you stay organized, that helps as well. And the other thing too is just understand the fundamentals. So there's so many free resources online about accounting and ledgers and balancing your books and things like that. So leverage those resources. They're there. They'll make your life a lot easier if you understand what you're actually doing. So there's a few steps to set yourself up for success when it comes to bookkeeping. First step is to open a business bank account. So it doesn't matter if you're a sole proprietor or an LLC or something else. Keep your books and records separate for your business and for your personal life. It's going to make your life so much easier down the line. So open that business bank account to legitimize your business, so you get a little more trust with your customers when they see that this is actually like a business transaction. You can also process credit cards, which you can't do through personal accounts. It helps with tax prep, and it also helps the IRS believe that you are in a business, not a hobby. And it can give you liability and identity protection as well. Along with this, if you are setting up a business, get a separate FEIN number so that your social security number isn't commingled with your business accounts. That'll protect your identity as well. Step 2 is to select an accounting method. So I'll go over these really quickly, but there's two types of accounting methods, accrual and cash basis. There's benefits and drawbacks to each, and most small businesses and farms use the cash basis. And that is basically any time that cash changes hands in your business, you record that financial transaction. So when you sell a bouquet to somebody and you take their $20, at that point, you record that sale. If you pre-order bulbs in May, but you don't actually get your credit card charge until September when they ship, you don't record that transaction until September. So cash basis is really easy because it's just anytime that money changes hands, you're good to go. You don't have to worry about accruals and deferrals the same way that you would if you were doing accrual basis. So it's really easy to understand your cash flow because your books are just cash flow. The drawback to cash basis is that it can be more difficult to truly understand your business's financial position because you may have some things pending that aren't captured in the books the same way that they would be on the accrual basis. For the example of the bulb order, right? You know as an owner that you put that order in and that you're going to have a pretty big charge coming in fall when you place that order in May, but that's not anywhere on your books. It just has to be in your memory. But if you're doing the accrual basis, it's on the books and you already are planning for that. With accrual basis, you record the transaction when the economic activity happens. So for example, if I sell subscriptions and I do pre-orders in fall so people can pay in fall, but they won't get their subscription until spring when they actually have the bouquet sent to their houses, I don't record that as a sale in fall when I actually get the cash from them. I record it as a sale in spring when I actually do the economic thing of giving them their bouquet that they paid for. So in the meantime, it's recorded as a liability. And in the same sense, if I had a $100 subscription that was over 4 weeks, each time I give the customer a bouquet, I allocate out a portion of that liability away. So if I give them their $25 bouquet in week 1, then my liability is reduced by $25, so I still have a $75 liability on the books, and that would continue on until there's no more liability as I fulfill the economic input of that transaction. So accrual basis can give you a better picture of your true financial position in your business because you are recording those things that are still pending. However, when you're doing accrual basis, then you typically have to worry about maintaining inventories and accounts receivable, accounts payable, which can complicate your tax reporting quite a bit and also complicate your bookkeeping on the monthly basis. The other downside to accrual basis is that cash flow is harder to track, so you really are going to rely on a separate financial statement to figure out how much cash you actually have. You may also end up paying taxes on money that you're still owed. So if you have a wedding and you charge your customer, but they have 30 days to pay, and your wedding's at the end of December and they don't pay until January, you're going to pay taxes on that wedding even though you weren't paid for it yet. Like I said, most small businesses and farms that don't carry inventory tend to use the cash basis because it's a lot simpler. So after you've got your business bank account set up and you figured out whether you're going to do cash or accrual basis, then you want to pick out your accounting software. And I would also recommend that you use a point of sale software if you're going to be taking a lot of credit cards. There's so many options out there for different accounting softwares. There's QuickBooks, there's Peach, Bench, all kinds of things. I use QuickBooks just because that's kind of like industry standard. So if you do have a problem and you take it to a CPA firm to fix some of your issues, just about every CPA firm is going to know how to use QuickBooks, but that may not hold true for some of these alternative accounting softwares. But that's not to say that QuickBooks is the best, it just has the widest use. I do like QuickBooks though because it has a lot of integrations, so you can import transactions from your point of sale system such as Square, which can help a lot. And one of the benefits of having a separate point of sale software and a separate accounting software is that it in a way is a check and a balance. So sometimes there will be issues with importing the transactions, so there may be duplicates or there may be missing transactions, and having the ability to check your transactions in each system can help you make sure that you're not missing things. The point of an accounting software is to help you automate and track all of your business expenses and sales, and it also helps you generate reports, which can be helpful to understand your financial position. QuickBooks is great too because you can track mileage and it automatically figures out the rates, so that's really helpful. So really the benefit here of the accounting software is entering all of your receipts and invoices in one spot and then categorizing those into your different accounts that you have. Bookkeeping and accounting long ago had a traditional ledger, so it was a paper where you would balance debits and credits, but now those accounting softwares do that for you, so you don't even really have to worry about like journal entries or anything like that. Unless you're doing accrual basis. So the big thing to watch out for is just to make sure that you're entering your expenses in the correct accounts, and we will go into talking about assets, liabilities, and equity in the next video. So just generally, you set up accounts and they can be as broad or as narrow as you'd like, but generally, they're expense accounts, and I break those out based on how I fill them out on my taxes. So you can pretty much just plug and play between your accounting software and your taxes, which is a great time saver. So generally, your accounts are going to be office expense, supplies, cost of goods sold, advertising, taxes and license expense, things like that. Having some forethought into setting up your accounts based on how the IRS sets them up can be helpful because you can figure out what is tax deductible and what is not, and that keeps you a little bit more organized. Step 4 is to keep and maintain good records. On a regular basis, make sure that you're entering in your receipts, your sales, your mileage, all those different things. The more on top of it that you are on the daily or weekly basis, the easier it will be at the end of the year to run reports and to file your taxes. So maintain some good records. I like to use, it's an app, it's called Adobe Scan, and you can take a picture of a receipt and it will convert it into a PDF or a JPEG as well, which makes it a lot easier to upload it into QuickBooks, and then you don't have to worry about paper records, which is really nice. So step 5 is to reconcile and adjust your accounts. So I'm sure you've probably heard the word reconcile, but do you actually know what it means? It just means checking your accounting software in your books against something external, such as a bank statement. So this is a good way when you scale your business and you have other people working for you and doing your books to make sure that nobody's trying to cook your books. But it's also a way when you're at a small scale just to make sure that you're not incorrectly entering information or that you're missing transactions. So most people reconcile on a monthly basis, and you just check all the monthly transactions against your bank statement, and if it matches, you're good to go. If not, got to add something or fix something. If you're on a cash basis, you don't have to worry about the adjusting entries for accruals or deferrals. Like if you prepay 12 months of insurance and each month of that period you need to allocate that away, you don't have to really worry about that if you're on the cash basis because it's just based on when you had your transaction. If you have large equipment like a tractor or something like that, you may need to do some depreciation expense at the monthly point that you're reconciling, but otherwise you don't tend to have to worry about journal entries. So once you've set up your accounting software, you're entering in your financial transactions on a frequent basis, and you are reconciling and making sure everything is good to go, then you can start generating financial reports. So this next video in this series will help you understand how to read financial reports, how to set them up, and how to use them to figure out how your business is doing. Thanks so much for watching, and I'll see you next time.